Good morning. It's Monday, November 13th. We had a really good day on Friday. This is the heat map from FinViz, and you can see Microsoft 2.49, Apple 2.19, Nvidia 2.95, Google 1.8, Amazon 2.1, Tesla. The Tesla TSLQ. You probably should have been out of that one. And if we want to look at it, let's just take a look at it, because I made a big deal about on Thursday that call because it was down. But TSLQ, so you know, it touched the 9-day. So you should have been out on Friday. You absolutely should have been out on Friday. If you bought it at 36, 37 and you're trading it, should have been out on Friday. I mean, you can trade it in the 65-minute. If you'd like. We've had quite a bit move on that one. Friday at 12:45 got you out with a 0.62%, 1% gain. Again, you don't want to short Tesla for too long. It's just a stock that's burned everybody. Yes, it's expensive, but Tesla overall, solid gains. In the algorithm, you make 68% over 24 months. 68% over 24 months. If you bought and held 24 months ago, you'd be down 37%. So the algorithm works on this one. You'd be in, buy at 201. Great buy. You're up at 214 right now. 7%? Somewhere in that neighborhood. 8%. In pre-market, you're trading at 216. Up from 214. This button hook that's forming, the algorithm still hasn't gotten you out. Even though this death cross happened, the algorithm has not gotten you out. The MACD looks like it's maybe crossing down, but we're going to have a bad day for that one to cross down. But again, look at this heat map. Today, the markets are a little bit down. What I would expect is that we see some type of green movement through the day. I just have a feeling that for some reason people don't show up and buy on Monday morning, but in the afternoon we should see some type of activity. But after that huge green day, might be a little tough. Now, if you want to know about TrendSpider, Jason put out a fantastic video on Friday. Market structure basics right here. I'll include the link in the newsletter, but go and watch this. I mean, this shows you, I don't even do half the stuff that TrendSpider can do, but Jason shows you what TrendSpider can do to help your trading or even investing. And if you want to sign up, remember, use my Linktree, linktr.ee/dailystockpick. It's right up here. The pricing on this one is fantastic. You can take it for a trial. It's $43.45 per month, which is 45% off. Again, it's what I like about this offer versus previous offers, you don't have to pay for the full year. You can start with just a monthly trial, and it's $43.45 per month. And it'll add up to $521. Make sure that your portfolio amount and the amount that you're trading makes sense for you to spend $521 a month. Or you can, if you don't like it, you can always stop it. Or say 6 months from now, you decide to go on a trip to Europe and you want to stop your subscription. You can do that. If you want to pay for the year, this is $382 per year. And this is, again, it's 60% off the regular price, and it's elite service. You really need elite. But if you want the best offer, $296 per year. And that's what's great about TrendSpider is I think, for $296, absolutely with my algorithm, again, in just Tesla, you make 68%. So again, make sure that your portfolio size is large enough to do it, but watch this video before you see it, because there's so much more in TrendSpider that you can do. And I'll be doing an episode with Jason where he's going to take us through. We might be looking at like the grade 8. We might be looking at some stocks. He's going to do an algorithm for you. He did an algorithm on another show that I watched that if you follow my Twitter, you would have seen. But it was a 1 hour Apple trade. And the thing over the last few days, I mean, Apple has just been in this soaring Look, 9% already, and we're down 0.33. I think you're going to fill this gap up at 191. But Apple has just been in this enormous stretch, and he did a 1 hour algorithm. He wrote an algorithm just, by the seat of his pants, and he said, okay, here's what we're seeing in this and blah, blah, blah. Again, TrendSpider's an incredibly powerful tool. So if you want it, again, sign up. You guys know I can't trade without it. But let's take a look at the Qs, because I put out a paid newsletter this weekend, and D-Man said, and thank you, D-Man, by the way, sincerely for the super nice words. He said it was the best work that I've done in the analysis. One of the things that I wanted to point out is here's what I think I pointed this out on Thursday. Maybe I put this in. It might have been Friday. I forget which newsletter, but it was one of the free ones. And I said, hey, it's forming this button hook. And you guys can see, think of a button hook. It's basically a half a button. It's a half a circle. And you can always see there's a button hook up top. There's a button hook down the bottom. If you just draw the bottom of these trend lines, well, the algorithm won't time it to the bottom, but it will come close. And I saw this button hook forming. Well, the button hook has been broken with Friday's candle. And this morning's candle at 376, you're still slightly above that button hook. So, which means we could still go. Just be careful. This is a market that is overbought. The RSI, Relative Strength Indicator, if you don't know what that is, go and Google it right now. But the RSI is at 72. That means there are significantly more buyers than sellers, but sellers have to show up. People will start taking profits. That's just how the market works. But this gap up here to 382, I think that might get filled. Then we have other gaps that we fill. But if we go and we look at a weekly, and this is where you're really going to see the market breadth, is all-time high was 408 back here in December 2021. The July high was 387. If you just draw right now and touch 3 points on a trend line, we're still in a downward trajectory. The MACD looks like, again, it's on a weekly, it's crossing up, but the RSI is at 60, close to getting to that overbought territory. Now, my algorithm, if you trade QQQ, it makes you 8.9% over 24 months. If you just bought and held the Qs for 24 months, you're down 4%. So again, the algorithm helps. In my world, I play TQQQ because it's triple levered ETF. So if you're trading, this is a great trading tool. It's still got confirmation. Am I holding on to this one? Absolutely. I will put my stop loss at this 200-day. I am down here at about 31, I think I bought. I tried to time it. I just got lucky, but the algorithm said, hey, buy it at 33. I will put my stop loss at about 40, I think. Right now in pre-market, it's at $40.29. I don't want to lose it. I don't want to set stop losses too tight, but I can trade this one all day. All day I can trade this one. And we're in a confirmation upward trend. So that article is just may end. China may buy these. Imagine what happens when it actually buys them. But Boeing has been a solid play. One that hasn't been a solid play, but looks like it might be bouncing a little today, is Boyle. Boyle is up 5% today, 53.20 it's trading at. This one, if we go back here to FinViz and you go down and look, natural gas is getting a little pump. Oil's getting a little pump. Natural gas is up 4%. Gold is down. The Dow, everything is down here in pre-market, but Boyle does seem to have it. You don't have confirmation in the algorithm yet. So the RSI, it's just a little bit oversold at 38. The MACD looks like it's going to cross up, hasn't crossed up yet. So again, this is a trade. This is a decaying asset, so be absolutely careful in this one. Now, one that Joe brought up, if you're interested in the Magnificent Seven, that's Apple, Microsoft, Alphabet, Amazon, Meta, Nvidia, and Tesla. If you're interested in this, there's an ETF, MAGS. This is the Magnificent Seven. It's an interesting play. I did do a chart on this one, and I will pull up the chart will be in the newsletter. The only problem that I see with this is that it actually underperforms all of the Magnificent Seven except Alphabet. So in my mind, I think, again, if you want to just say you're going to spend $1,000, in my mind, I think you're better off just splitting it up between these 7 and just by, the 7. Tesla, in my mind, is the one that might perform a little bit harsh just because, and this is the danger of Tesla is you look at the PE and then nobody cares about the PE. The options drive this thing up. Year to date, you're up 74%. The average target price is $239. You're trading at $214 right now. So I do think that Tesla, in my mind, I've always been scared of Tesla, but it's bitten me in the ass every time. Tesla has been one to just buy and hold. I said, here, button hook is sort of forming. We're kind of putting in a capitulation here. So if we capitulate, and again, if you watch that TrendSpider video, you'll see Jason talks about just capitulation. But if we capitulate right here at about 215 or so, I think that's putting in the mark for the 50-day to start to turn positive. Right now, I probably wouldn't buy Tesla. I probably wouldn't buy a lot of the big Magnificent 7. But Mags is a great opportunity for you to go in there. If you want to see anything about Mags, sign up free for a Seeking Alpha subscription. You can use my link tree. Just sign up. You don't have to get the paid version, but understand what you're getting into and understand what you're holding. Remember, this is holding 58% Treasury bills. So it's holding 58% Treasury bills. And then the rest of the 58, this is a actively managed ETF. So understand what you're getting into, understand the performance, research it on Seeking Alpha. I really like that. Cave. I hope I'm saying that. Cave. Kava. Maybe it's Cave. I've been told by some respectable professionals that Cloudflare is a good purchase right now for the long term. Was wondering what your thoughts are. Cloudflare, their symbol is NET, and I tend to agree that it's a good long-term buy. If we were looking long-term and you look at a weekly, this one got all the way up to $211. It's been killed all the way down. And part of the reason it's been killed all the way down is I think they just haven't, their cost, income, minus $202 million. They're not making money. Higher for longer will kill them. Year to date, they're up 39%. Average target price, $65. They're trading at 63. 52-week high is 76. So I don't know that it's oh my God, it's a crazy good one. You can see November 12th, a bull market is coming. 2 monster growth stocks to buy with $100 right now. Part of growth is you want to buy these companies that aren't making money that will start to make money. Here's what scares me about Cloudflare. Look at all these people selling, and it's not small sales. You're talking $1 million from a director. You're talking $659,000 from another director. And it's all at this $60 price. Look at these guys back in September at 63, $3 million. Or I'm sorry, $6 million because he did two of them. So he's selling $6 million. That's the CEO at 63 selling $6 million worth. Here he is again. That's $9 million worth. If we just go back, let's just take a look at how much he sold. Look at how much he's selling. That's $3 million at a pop. At a pop, he's selling this. And so I'd be a little bit scared, Cave, about that one. Is it getting me out of it? Probably not if you're in it. Again, other people understand this. It's not crazy expensive. I shouldn't say that. The forward P is 119. So it is crazy expensive. Price to sales is 17. So I think it could still come down. I was reading that as 19 before, but it's 119. Hoofa. I didn't think it was crazy expensive, but now that I see it's 119, yeah, it's crazy. Earnings per share this year, up 239%. That's where you're going to get continued growth. If they continue to perform next year, they're expected to go up 20%. That's going to continue to just drive the stock down. If they can find some growth, great. But if they can't, higher for longer is going to kill this stock. From a short term, from an algorithm perspective, you lose 65% on this with the algorithm. You lose 68.9% if you bought and held it. for 2 years. So it's not crazy to think that, hey, you could invest in this and make a lot of money. I think there's better places in the market for you to look. K Spears wants me to look at ARKK. And sorry, by the way, there's a lot of social requests this week or today in particular because for some reason Spotify just all of a sudden posted all your social requests all at once on Friday or something. Here's ARKK. I'm not a huge fan of the ARCs, and I'll tell you why. I think they're targeted by big firms. So what I mean is she publishes her buys and sells at the end of every night. So there are significant ETFs that short this. There are also significant big funds that basically trade on her buys and sells. So her making her buys and sells public, I think hurts you in holding this ETF. But I think trading the ETF absolutely 100% works. Now, my algorithm loses you 43% on this, but you lose 66%. So what I'd tell you with my algorithm is make sure that the buys are solid buys, like this one at 35. I think the next candle, you couldn't buy it. I think that gap up here where you went from 35 to 37, I think that was an absolute buy. I think that, this next gap from 38 to 39, you've started to come back on it. So you're seeing trade this one on that one. Now, if we look at the 65-minute algo on ARKK, which is interesting, you make 2.8%. If you use the 65-minute algo. Now you make 3% if you buy and held. Again, the 65-minute algo tests about 1,000 candles. It goes back 8 months. So your average win on the 65-minute algo is 2.12%. Your average win on the 4-hour algo is 9.89%. So just understand, the whole reason that ARCs, my favorite ARC fund, by the way, if you were to buy and hold one, is just ARKW. I just like that one. That one's less targeted from an ownership perspective. I think it owns better companies. If you want to know what they own, you can go over to Seeking Alpha and look at what they own, what's in the portfolio of ARKW and ARKK. I think ARKW, owns more GBTC and Bitcoin, if I'm not mistaken. But ARKK, I don't think it's a horrible thing. I just think you have better opportunities. Alex wants me to look at Kroger. Kroger is one. This is an interesting one. I think they use Instacart. Walmart has their own delivery service, so I tend to like Walmart more than I like Kroger. The margins on groceries are just really, really bad. So Kroger, it has you out in the algorithm. You've got your ex-dividend date coming up. Your earnings are coming out November 29th. From a algorithm perspective, it loses you 7%. Buying and holding makes you 3%. Doesn't have enough volatility for the algorithm to say, oh, okay, we're going to make some money. If you look at a long term of this one, if we go to a weekly and you look at it, you're just coming back to the 200-day. I mean, you're going to come down to 41. In my mind, I just don't think there's anything specifically exciting about Kroger. If we look at KR and FinViz, you can see the forward PE is 19. Here's the thing that I know personally, and again, this is just personally. I go to Walmart for groceries. Walmart has picked up their grocery business significantly. One bell ringer says Kroger has delivery. So they must have their own delivery service. But the cost of that is probably, again, they have to scale that. So it's a little bit, in my mind, I have a friend that has a food delivery business and they use the DoorDash API. So maybe that's what Kroger did, is use the DoorDash API. But Instacart, Instacart, that they want to get into these types of businesses, so they're offering a little bit better. I don't know enough about the business. Target price $50. You're trading at 43. 52-week high is $50. You're down 12% from that. You're close to the 52-week lows. I don't see any buys giving me confidence that these guys think that this is the bottom. I just don't see any reason to get into that. I think there's better opportunities in the market. But if you shop at Kroger and you love Kroger and you think Kroger is going to make a huge, huge business, I think that's again, if you use it, I don't use it. I go to Walmart. W. Cred said, hey, there's something dinging throughout your podcast. I think that's the subscribe. I use a green screen for the video, and I put the subscribe graphic down at the bottom, and I grabbed it from a website as part of a green screen thing that was free. I think that's what you're hearing, W. Cred, because I do have Do Not Disturb on. And I'll try and put it in less. I think I put it in every 20 minutes or so. So it does ding every now and then. So it is what it is. D-Man from the newsletter. Soon as sellers step in, buyers step up. Looks bullish next week. Tickers he's looking at are PPG and MAS. Let's look at PPG. This is PPG Industries. D-Man's been pretty good on some of the calls that he's had. PPG, maybe a rebound. 123. Earnings, they've already had their earnings. There's no catalyst involved. You've got your confirmation. 129. PPG. I don't know what they do. Let's see what PPG does. PPG Industries, specialty chemical. They make market cap of $30 billion, income of $1.42 billion. They are 15% below their 52-week high of 152. They are near their 52-week low, which was 120. So they're 7% above that at 129. Looks pretty good. I mean, FinViz has a nice little chart here that shows the bounce up. I would be careful because I do see the 50 days moving lower, 200 days moving lower. The 9 and the 21 are moving positive, and you do have a cross up on the 50. So maybe the 50-day might start turning positive. Maybe a pretty good play. Let's look at MAS. MAS is Masco. Let's see, MAS. What do they do? Are they a chemical company too? Building products and materials. You can tell D-Man works at Home Depot. 12% off its 52-week high. Yeah, I think you've missed the bounce on this one, but I do like the 50-day. That 50 days, kind of like I just talked about on PPG, the 50 days moving positive. You're going to use this 200-day as kind of resistance. The one thing I would tell you to worry about is the RSI. And the MACD is super, super higher at 1.57 on the oscillator. That one, if it gets a cross down, you're going to get what I call that button hook on this one, because that's going to automatically just start bringing it down with algorithms and big traders doing that. So I think you're going to start to move that way. So I'd be a little bit careful, but I appreciate your comments on that one on the newsletter. Now, Willie from Instagram, he says, there were a large insider XOM buys last week. Can you touch on this one this week? Have a great Sunday. XOM, just take a look at XOM. I mean, there were huge buys. I say anytime this one gets close to 100, start adding. You've got $140 price target, which is the most recent from Bernstein. I don't think that's out of touch. You had November 6th. You had a super, super buy. Jeffrey Ubben bought $26 million worth. You can see this dude starts adding right about 100. You can see right here, July 31st, he bought $48 million. He bought it at 106. He's down on that one. $48 million or $20 million at 106. He bought $26 million at 105. He bought a bunch back here at 15. He bought a bunch at 27. That's AES. Let's look at XOM. XOM, he bought $84 million worth back on August 4th of last year, where it was trading at $88. August 4th of last year is where he bought $84 million worth of XOM. As EAV2, but solid. I mean, the insider buy, you can't ignore that $26 million buy. The dude is thinking that, hey, XOM has a solid track record. I think when they integrate, they just announced that they're getting into lithium. If we go over here and we look at Exxon, they announced there's some news stories about them getting into lithium in Arkansas. So they're going to start that. Strong buy on the Wall Street. Wall Street analysts have it a buy. Seeking Alpha analysts has a buy. The quant has it as a hold, the 3.46. That, in my mind, anytime you get close to 100, you start adding to this. I'm seeing this 9-day start to turn around. You did just have a death cross of the 50-day crossing the 200. This is around the time when they had their earnings. They made $2.27 per share. Their ex-dividend date is coming up November 14th. So, Willie, I hold this. I hold a lot of this. I definitely have well over a couple $100,000 worth of Exxon. I just kind of sit in it. I don't look at it. I bought it, a lot of it way back in during the pandemic. If we go back on the weekly, you can see back here the pandemic, pre-pandemic. This was a $71 stock, and you're moving down. You got all the way down to 34. I think I bought in July of this year. I think I bought it like 40. 40 was my average price. I've been adding to it. I haven't been trimming. I like the dividend. Do I think it's getting to 140? I think you get to 140 before you get back to 77. But I don't know the price of oil. Again, from a strong, you had this golden cross here March 14th. You were trading in the 70s when you had a golden cross on the weekly. You're now at 140, almost 104. I think 120 is a solid resistance level. So if you buy at 104, I think you get to 120 when oil starts to go up. I just think that again, oil is a solid play. They're buying Pioneer Natural Resources, and as Exxon stock goes down, you can actually buy Pioneer and get 2 shares of 2.336, I think, of Exxon when that deal is done, and you get a nice dividend here. So I think that's like a 4 or 5% dividend. Let's see, PXD. They announced a special dividend. It's a 5.56. So I like Exxon. I like PXD. I own both of them, and I like energy stocks. I just think that energy is manipulated from international people. So be careful where you go. But I don't think that any kind of anything that's horrible. Anything around 100 for Exxon is horrible. I think you'll be fine. So scans. We've been in this bull market. Like I talked about with the green stuff, green shoots on Friday. We've been in this bull market, so it's hard to find stuff that's actually not bullish or just getting to bullish. Next Gen Energy, NXE. This is part of our energy trade. We've traded this one. This one has been it's in an upward trend. You can see it's kind of bouncing all over the place. But it's near its highs. I don't know that I'd necessarily get into this one. Do your research. Understand that it's just a name that looked bullish in a list that I have. Arch is coal. This one, bullish trend. The RSI is kind of in no man's land here at 46. But kind of, still in that positive trend. The 50 days moving negative. I'd wait for this one a little bit to maybe have one more or two more bullish candles for you to do it. Their ex-dividend date is coming up on November 29th, and I do think they have a pretty good dividend, if I'm not mistaken. 7.34%. So solid. It's up 10% year to date. The average target price is 179. You're at 147. So your 175 is your 52-week high. These guys just sell a ton of coal to China. So if you're okay with that, then get into that one. Now there's a couple here that I think are interesting. This is SRTY. This is a levered ETF. It's ultra pro, so it's 3 times levered, short of the Russell 2000. The Russell 2000 has not performed as well as the rest of the stock market. But here you can see September 27th, we had $42. Now, what's ironic is that $42, you got all the way up to 60 here. The algorithm got you out with a 14% gain right here, but you could have gotten out way up here. Once you passed October, the Russell 2000 just soared, to be honest. And so this triple levered ETF went down. Now, ironically, you've got confirmation, and it's 53.48. Do I think that the Russell 2000 is going to crash? I don't track small caps large enough, but it is interesting that one in particular, a triple leveraged short ETF, got the cross up. Similarly, Real estate bear, DRV. This is a triple levered ETF against the real estate market. This one got a cross up at 57.49. Might just be too oversold. The RSI is at 46. You're coming off levels of November 3rd. It was at 28. So it might just be, coming up from the 53 to 59. I mean, this has been a great play if you got in at 53. At 57, maybe wait for it to get to the, don't wait to buy it. But if you wanted to buy it, my upside, I'd probably sell if it hit that 50-day at 62. So I don't think you're looking at a huge, again, I think there's too much bullish narrative in the market for something like a DRV or an SRTY to really take off. Now, Mara, we talk about Mara. They had their earnings last week. They pumped it up. The algorithm got you out with a 19.83% gain. It gets you back in today at $9.61. You're trading at $8.99. If you listen to me for a while, you'll know I say buy Mara under 10, sell it over 10. Once they start making money, I mean, they were losing 13 cents per share. They just went into a tailspin. They announced that they lost 9 cents per share. I didn't look at the earnings particularly, but if you're losing money in this market and with Bitcoin continuing to go up, I think this one at 961 and you get it under 9, I think you could easily just get it back up to 10. So it's up to 9 right now. But Mara crossed up. Meanwhile, in ETF of Bitwise, BITW, this is the 10 crypto index. Look at this one. I mean, this just got another bullish cross up. But this one, the algorithm gets you in at $12, okay? You're at $20 right now, BITW. The hype on the Bitcoin ETF is crazy. GBTC, I mean, we can go and look at GBTC. They had a cross up a while ago. The algo has been solid on this one. Here, you lose 41% over the last 2 years on GBTC. 41%. The algorithm, if you get it, there's 29 positions. You win 24% of the time. But your average win is 28%. That's not including this run, where October 2nd, you got in at 18. You're at 29. 29 right now. And when I talked about it last week, GBTC is trading at a 13% discount to Bitcoin. So when they transition to a spot ETF for Bitcoin rather than a futures ETF, boom, there's your 13% gain. So BITW is one. GBTC continues. It's a little bit overbought right now, but be careful. Ring Central, my buddy works for Ring Central. They got a cross up. The only reason I'm bringing it up is because my buddy works for them. I'm not bullish on this one. The 50 days moving down, the 200 days moving down. The only reason I bring it up is because my buddy works for them. One that I might be interested in, and it's just because of the recent move, is Comcast. Now, the problem is Charter and Comcast and everybody else, they're losing the video service, so they're losing their bread and butter. But the cost on that is significantly increasing. So losing subs, they're not too worried about it. Comcast in particular is going to streaming, and they've moved to Peacock. They also are selling their Hulu stake to Disney. Now, Disney mistakenly, I think, forecast this one and said, oh, we want to buy the Hulu stake. And they said it in public. Iger said it in public. That just tells me that Comcast can pretty much name the price. And Disney probably will pay for it. So, the 200-day here is at 43. Understand you just had a death cross. You just had the 50-day moving down. And the 50-day continues to move down. But your RSI is at 47. Is 41 a good price for this one? In my mind, I think you wait for it to cross 40. I don't know that it will. But I've worked for the cable companies. Wall Street constantly devalues the cable companies. These guys, the problem that Comcast has and other people have is that wireless service is going to come and take over your home internet. So wired service is going to be needed. There's a lot of streaming that's going on. I think with football, in particular Amazon, I think with the amount of people that are streaming football on Thursdays, I think I read somewhere that 41% of the internet's bandwidth in the U.S. is taken up and occupied just by football on Thursday nights. So it's an interesting one. And finally, the S&P, of the NASDAQ, Fastenal, FAST, you've got confirmation, but it's crossing up again. I mean, it's just continuing the bullish run. So you got a secondary up here. That just tells me, hey, it's going to continue to run. I think you're at all-time highs on this one, so be careful. Your all-time highs are back here at 64. So it might move again. You don't really have a catalyst. Your earnings are already gone. Your ex-dividend date is gone, so just be careful. So there you go. I will be back tomorrow. Remember, TrendSpider's sale. I will be doing I think it's tomorrow, I'm going to be doing an episode of the podcast with Jason. I won't be live doing it. We're going to tape it. But the sale it's the Black Friday sale. It's going on here. You can go just to my link tree if you want it. But you're getting 1 year of free futures with yearly or prepaid plans. So the elite is what you want. This middle level is absolutely the sweet spot here, as low as $24.70 per month. So if you click on that, you're going to go over here to the Linktree, linktr.ee/daily stock pick. Click on that link. Then you'll get in my program. What you're going to do after that is once you sign up, you email me. The email is right here, dailystockpick3@gmail.com. You email me and I send you back a newsletter. You hit the ground running with strategies that you can import and use. You guys see the strategies that I use, the algorithms. So if you don't want TrendSpider and your portfolio is not huge, or you're just kind of a ancillary trader, but you really want investments, I think the Seeking Alpha platform at $189, I think that makes sense for you. I use the premium version a lot more than I thought I would, to be honest with you. I thought I was more of a trader, and the investor, I thought, I could use this, but I actually like a lot of what the premium version of Seeking Alpha gives you. It gives you the quant ratings. You're able to import your portfolio, and you can see the core portfolio here. We've got a health score on the core portfolio. It will tell you which particular stocks maybe you should look at trimming. That's what I really like. Watch out. You have one stock at risk of performing badly. So your dividend score is 4. 4 out of 5. What do analysts think? Analysts think mine is 3.57%. My portfolio is in the top 12%, I think. Top 29% of all portfolios. So there's others in there. I mean, understand that's just a score by somebody else, but that's the core portfolio. And so I think Seeking Alpha is a solid one. The newsletter. It has a paid version, but you can sign up for free. I basically put all the links that I talk about and everything in the newsletter. It's dailystockpick.substack.com, or you can go to the Linktree and sign up. But the paid newsletter is on the weekends, and it goes over a little bit more about my thinking. It does have a free 7-day trial, I believe, and you get access to all the archived articles as well. If you're paying more than $25 a month for your phone service, Visible. Just, it's $25 a month. This is the service that I have for $25. I've never had a problem. Not one time have I had a problem. It runs on the Verizon network. So say you have 1 or 2 phone lines on Verizon and you're paying $50, $60 per line per month. Get Visible. $25. It's the same service. And if you want the absolute premium service, it's $35 a month. I mean, again, this is, you can't beat this. So I would say go get Visible. If you're buying a Tesla, use this link. If you want AT&T fiber at your house, I have 1 gig service at my house. Love AT&T. Love the service. It's a 1 gig service referral. So you get a billing discount. I get a billing discount if you sign up. So any other things are on the Linktree. I will be back tomorrow. I will talk to you guys later. Bye.
The trading